The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 23rd. Terrific Thursday edition of today's Trader's Edge show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648 internationally, 727-445-1044. Would love to hear from you, and now is not too soon. So let's go ahead and get this show kicked off on Terrific Thursday. Of course, it's the Hotel California, sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 152 points at 17,932. S&P 500 up 19 points. She's trading at 2104 and change. NASDAQ Composite up 55 points. Trade at 4888. 888. Those are good. Those are good Chinese good luck numbers out there. The Russell 2000 up 18 points at 1166. You've got gold down $6, trading at $12.64. Silver is up 2 pennies, so she's flat, just laying there. $17.34 is what she's trading at. Light sweet crude up at the $49.57-ish level. That's up 44 cents. Priceline, the leader to the upside, up $27. Chipotle up $12, 3%. Amazon is up $8. Twilio Inc. up 71%. Not sure what's behind that out there. Maybe buyout merger or something. Maybe IPO, I don't know. You've got, my apology for not knowing, BlackRock. Maybe we'll take a look at it. BlackRock is up $6, about 2%. Leaders to the downside, you've got Khaki Cousins, as they would say in Royal Oak, Michigan. But this is Khaki International. CACI is the ticker symbol. That's down about $8, trading out at $91.39. Google's off $2. No big shakes there. You've got Stamps.com off 2.5%, $2 and change. Tesla's off about $1.21. So where do we begin? You know, I think where we should begin is, let's say, you know, since everybody's talking about it, you know, the Brexit or whatever, the Braystaven, whatever it might be. Let's just go look and see what the charts are communicating to us. And perhaps the best place to start, the two places for us to take a look at, I would say, would be the FTSE in the UK. So we'll take a look at their stock indice, and then we'll go take a look at the Great British Pound. We'll take a look at, you know, try to find both sides of the trade out there, see what's underway. So let's start off by taking a look at the FTSE. Now, let's put this chart. I'm going to switch back and forth, I think. I don't even think. I know that that's what I'm going to do is switch back and forth between the two charting applications. So if you're watching this on TigerTV, I hope that you are. You're looking at my Ninja Trader application here. And we can see that on the trading session here of June 17th, you had a nice little hammer candle that formed out there, nice bottom. So just looking at this chart, now those of you that are skilled technicians, you probably already see the pattern that I'm going to mention. You already, right now, off the tip of your tongue, somebody is yelling out. I heard somebody say A to B equals CD to the downside, and you are absolutely right. We'll draw that pattern. I heard somebody else in my right ear say, "Wait a minute, that's a huge Gartley buy pattern that formed inside of the FTSE. Yeah, you and I would just trade patterns. Now, let's go take a look, and both are correct out here. If we take a look at the A to B equals CD, we're going to start at the swing point from April 22nd. We're going to move down to the low, which either could be this hammer candle. I can't tell if it's the hammer candle or this trading session from May 20th. That says 60.50.21. This says 60.54. So it's this trading session here from May 20th. That's your B point. Moves up, creates this nice little shooting star, the opposite of the hammer candle. Does that on June 8th, about a 0.618 retracement. It's actually, that's a 72% retracement, so in between there. But you can see as the 1-to-1 A to B equals C, D was being formed. I'll say that again. The 1-to-1 A to B equals C to D. We had a nice little hammer candle. Why is that important? Because every single pattern that you trade, and I mean every single pattern that you trade, will give you a reversal signal when it's time to reverse. Otherwise, it will just keep going out there. If I could share with you just one thing, one belief, one thought that would add gazillions to your trading system, it would be to understand your candlestick charting, your candlestick patterns out here. In fact, I'm so committed to that tomorrow we're going to have as a guest on the show the individual responsible really for bringing Japanese candlestick charting to Western society. So Steve Neeson, he'll be with me tomorrow in the second segment, maybe the second and third segment out here. So that'll be very cool. But in taking a look at that nice little hammer candle that formed there, he had some nice follow-up, by the way, on the very next trading session on June 18th. So that was your reversal signal, regardless, and I do mean regardless of whatever the gosh darn tube news, boob tube, as my mom used to call it, was trading. You either get sucked in on the news, or quite frankly, you turn off the boob tube, you pay attention to the chart patterns out here. Now, I did mention it was also a Gartley pattern. It's easier for me to draw retracements on my e-signal platform, so let's go do that. You already saw the A to B equals CD. We can draw that on here too. And if we take a look at the retracement, now this is a retracement off of the low. Now, what is a Gartley pattern? What a Gartley pattern is, H.M. Gartley, what the purpose of the pattern that he authored is that when you've missed out on a sizable move, in this case here, this would be a sizable move to the upside. We know that February in 2016 formed a nice, significant bottom and low out here. So you had a nice move from there up to these highs out here on the trading session of April 21st. Makes a retracement about a 0.6. Remember, Leonardo DiCaprio and Fibonacci said we use these as guidelines, right? They don't have to be exact. So it's about a 0.618 retracement to the downside. The makers of these signals, the buyers and sellers, they're the ones that tell you when the move is over, exactly to what tick, what pip, what penny, what dollar, whatever it might be out here. So we got that confirmation. And now you can see that's what formed. Here is the actual Gartley pattern. If I had the Ensign Windows software, versus eSignal, you could easily draw that pattern like Larry does, which is beautiful software out here. It just doesn't allow me to do all these other things that I like to do. So there's your A to B equals CD. There's your retracement. And then, as you know, every single Gartley pattern has but 5. That's right, count them. 5 potential outcomes. Now, let's go take a look at what those outcomes are out here. Because 1, 2, and 3, perhaps even 4 outcome has already been fulfilled. Now, what are those outcomes? Well, they're really simple. You've either got a 0.382, a 0.618, or a 0.786 retracement from that A point to that D point that will unfold. But guess what? The FTSE is trading right now at outcome number 3. In fact, it's trading just above outcome number 3, which is 63.14. It's trading at 63.38. And guess what? It ran right into this candle signal here on April 21st. By the way, Steve Neeson would call that a bearish engulfing. I'd call it a key reversal session. 64.27.32. Let's take a look at that when we get back from this break. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader.
As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're taking a look at the FTSE here, and I also know that somebody out there was taking a look at that chart, and they were trying to stick their hand through my screen and say, "Hey, Steve-O, you asked me to take a look and see when that hammer candle was formed. You know, you asked me about a pattern, and you didn't show my pattern out there." I just didn't get to it. But you're right. I know what you were thinking, right? You were thinking that I taught you about that wonderful, because it is baseball season out there, you know, and I taught you about that wonderful seventh inning stretch out there, right? We'd love to be paying attention to that seventh wave count of the Chapman wave outer. That is our seventh inning stretch. And if you go from that bearish engulfing, right, that was the candle. It's also a key reversal session out there. So we're going to talk a little bit more about that. And if we go from that April 22nd high and we start doing our counts all the way down to that hammer candle, guess what? So you had A to B equals CD to the downside. You had, which formed also, by the way, a Gartley buy pattern. And it formed a seventh wave to the downside. Could it get any better than that for everybody to have been sucked into the scariness of the news media, yet all that was really going on in the market was forming a nice buy pattern? Now, the buy pattern is complete, and now the question is, hey, where does price travel to, right? Well, you take a look at outcomes, right? The first thing is to understand your outcomes out here, and that's what we're doing. Right now, you're at outcome number 3 and potentially outcome number 4. Why do I say that? Because when we take a look at that swing point, the day that we're looking at is April 21st. That is a bearish reversal signal out here. You can see how price has tested that. Thus far, it's rejected that swing point. I don't have volumes on the FTSE, so I don't know whether or not it is actually a test with volume, which would be important to us, or a test on lighter volume. I don't know the answer to that question. It just would give us another piece of information out here. Nonetheless, we know that that level had been tested. A true test would be testing the top of that swing point, 64.2732. So 3 of the outcomes have been fulfilled with regard to that Gartley buy. Does it have to do anything more than this? The answer is no. It does not have to do anything more than this. What happens if 64.2732 is tested and price closes above that level? Well, it'll achieve outcome number 4, and it will be ready to move out to outcome number 5. And if this turns out to be outcome number 5 to the upside, what does that set up? That's right. That sets up an A to B equals CD to the upside. And for that price projection, here is where the FTSE would travel to at a minimum. And I do say minimum, 68.27, 78 to be exact. More likely 70, 80, 14 would be where it would head to. But it has to clear 64.27, 32. I have no clue as to which way this vote is going to turn out, even less of a clue as to how the market is going to respond out here. What we do know is the FTSE set up a nice buy pattern. It completed, in essence, a 100% move of a move. AG in the den says it was moving into it with volume. I would, say that would make a lot of sense with the strength that we've seen inside the markets out here, and so that would suggest that you'd see at least a test of 64.27, 32 out here. In any event, watch for that level, because if that gets taken out, price is going to head to the 70, 80-ish area, and that's on the FTSE. Now, there's a lot of selling up here. Although we've got, when I say selling, there's a lot of bears up in this general area of 64.27, right? If we take a look at this trading session out here on December 3rd, nice old bearish engulfing session, you can see kind of really at about that same level. So that is a significant area of resistance, and just simply being able to bust through that area would be your signal that price is going to get back in, probably head up to its April highs out here. And, maybe even as high as 70, 82. So you've got the ultimate in Gartley buy patterns that set up inside of the FTSE. You see, the market didn't give rats, anything with regard to what was going on in the tube. It was doing its own thing. Okay, so that takes care of the FTSE. Let's go take a look at the Great British Pound out here, right? Let's go see what the currency, because currencies rule, don't they? Let's take a look at the longer-term chart for the Great British Pound out here. Now, what is it that George Soros is potentially looking at out here? Taking a look at the crater. Of course, I didn't give you downside action in the FTSE. We'll go back and perhaps do that. But let's just stay on the currency pair. What is it that he could possibly be looking at to the downside? Well, I would have to say it's probably this large A to B equals CD to the downside. We know he's big into technical trading out there. I mean, who isn't? And if that's the case, and however the market responds, regardless of the decision, the downside potential inside of the Great British Pound takes you down to 133.05. That's the level. First, it would have to get below, I'd say, 143. 143.11, that my number keeps changing. Now, by the way, this is a weekly chart, so this is a longer-term time frame chart that we are looking at out here, and that would then complete its A to B equals CD to the downside. It's still in play out here, but by the hair on its chin. Now, to the upside out here, if we take a look at that, look at from this high. Again, it's a weekly chart out here. These patterns, they repeat time and time again. Any instrument, any time frame. It's why you turn into the show out here, right? Because we look at it time and time again, then you go ahead and you put it inside your trading arsenal. Now, if we take a look at the high out here, as you should, if we take a look at the high from the week of June 19th, 2015, and we start doing our wave count to the downside, the Great British Pound, folks, quite frankly, it bottomed March 4th. It bottomed March 4th, 2016 on a weekly time frame out here. That's when the bottom came in. That was a 7th wave move. No bullish reversal signal. That bullish reversal signal, quite frankly, didn't show up until last week when it formed a nice little hammer candle out there. And we've got a nice little bullish crossover, Stevie's red line. That's a red line we pay attention to. That's at 1.4312 out here when it crossed over that little black line out there. And we can see that price is above the descending price channel line, really. That red line out there, it's measuring, it's coming off of the body of the candle, because the body of the candle is the essence of price, as you know out here. And so, but of course, this is a weekly chart. And so it's really going to be all about tomorrow's action with regard to this. We know that this is strong resistance, this being what? A price point, I'd have to say right around 145, 1.453, somewhere right around there. Again, it doesn't matter, you can't assume that the market is just going to respond positively, regardless of the way regardless of the news out there. We just pay attention to chart patterns. So, but breaking the Great British Pound, because people have sort of written this off, I think. If I were George Soros out here, I'd sure want some other piece of information out here, because I see bottoming patterns out here inside of the Great British Pound. I certainly wouldn't want to be betting my ranch to the short side inside of the Great British Pound. It's giving you nice signals here. This is a weekly chart, right? So it's intermediate term. We'll know that for sure tomorrow. But if I were to take a look at this on a daily basis, let me see if I can find anything on a daily time frame out here for the Great British Pound, the U.S. dollar out here. No, not really. Just a series of A to B equals CD patterns. Really, just a consolidation. How about the daily showing a nice consolidation pattern out here? So thus far, the FTSE, nice bullish chart out here, but it's up at resistance. The Great British Pound has shown a nice little bottoming pattern out here. And soon enough, tomorrow during this show, well, it'll be before the show, we'll have a pretty good feel how the market is responding, regardless of which way they vote out here. Hey, by the way, and I told you this yesterday, the day before, and Monday, all the charts around the world are bullish. So everybody's either got it wrong or everybody's got it right. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 159, S&P's up 20, Composites up 57. So one of our denners posted a chart of the DAX inside the den. So let's go take a look at the German DAX, see what kind of message we have out here. And I believe, and I tried to replicate it, but I just didn't have a chance to really go back and check and see if this is what he's got. But I'm sure that it is, or it's certainly very close. We're looking at this descending price channel that has formed inside the DAX ever since its high back here in April of 2015. And you can see that it is clearly in a descending price channel. That says that it's got resistance at the upper boundary line of its price channel, which is somewhere around 10,650 or so. You know, you got to give or take a few points out there, but somewhere right around the 10,650-ish level. Now, the question I would pose to you is, do you think that price is going to go tag that level? Yes or no? Is there a pattern out here that would suggest that price would go tag that level? Well, here's the deal. The DAX has one of the most bullish patterns that it formed. We talked about this, I believe, on Monday. One of the most bullish patterns that it has formed in years. The last time that it formed, it was at a major bottom. I believe it was 2013 or 2012. We go back far. We go back in the charts and look at it. And that major bottom pattern, by the way, is this nice little island bottom out here. That island bottom is right here. Here's the island bottom pattern inside of the DAX. Now, it happens to come. You don't see this too often, but it happens to come at the end of a pattern as well, right? And I really gave that away to you, right? Because, markets are somewhat similar. If we take a look at the DAX, we can see it's A to B equals CD to the downside, right? The A point out here, similar to the FTSE. April 21st is your A point, your B point down here, May 6th, your C point out here. Nice little key reversal session, just like the FTSE did. This is only, in this case here, was a May 31st for its pattern. You can see it made a 1, and we're talking 1 to 1.272 A to B equals CD to the downside, almost really to the tick out there. So what does that set up? That set up a Gartley buy pattern, right? Let's get rid of the A to B equals CD. Let's go ahead and put the retracement. So you'll see from the swing point low back here in February to the high out here. This is the DAX we're looking at on April the 21st. You can see it also almost made a 0.618 retracement. So you didn't get the bullish signal. There was no Japanese candlestick other than that open window, right? That little gap up that created that island out there. So we know that we've got the nice big old bullish reversal. So it formed also a Gartley buy pattern. So if we go take a look at, just use the exact same tools. We just simply go from that high of April 21st down to the low inside of the DAX that came in on June the 16th. We can see that it has made the 0.786 retrace. Let me see if I can go ahead and widen this up just a bit here. In fact, it really closed at the 0.786 retracement, and looks like it may have also tested the low of the swing point that would be its next target area. That's April 21st. The low was 10,341.97, it looks like, and the high today was 10,340.84. Just missed it by a smidgen. Of course, if this was moving into it with volume, Tom's interpretation of it would be nothing could be more bullish than a move into a swing point and just ducking right underneath it and not touching it with volume. I think he would use the word devious. And so therefore, if in fact the DAX moved higher today with volume, then it's very devious, and it's probably going to go ahead to the 10,474 level. And as AG said, he said, yeah, I think price is going to go test. It's going to go test that descending price channel. I would say if it takes out that April 21st level there, what you've got set up, because you've got outcome number 5 inside of the DAX as well, you've got a huge A to B equals C to the upside that says you would move to 11,207, maybe even 11,690. I'd have to say right now, the way price is moving, I'd have to say 11,690 inside of the DAX. But first, it's got to contend with 10,475. Now, downside action inside of the DAX, we didn't get a chance to do this for the FTSE, but downside action is pretty simple, right? Where this ought to find support is the bottom of that island bottom that formed out here on June 16th, last Thursday, a week ago today, 94.3287. Now, the island didn't form a week ago today, but the low of that island formed a week ago today. And as you know, there is nothing, and I mean nothing, more bearish than a failed bullish pattern. So there's going to be your key. It doesn't matter if the market responds and it pulls back or anything along that. You know, that's no big deal out here. The question is, what does it do? On a pullback, where does it head to? What does it take out? in this case here, because, we're going to wake up, we'll see our futures, but you really want to go to the cash indices, see how they're trading inside the DAX. Is it taking out 94.32, or is it taking out 10.341, or maybe 10.474? Because that's going to give you the setup with regard to the markets. What is it that I see at the moment here? If we had no vote or something like that that could possibly be the influencing factor here, I just expressed to you that markets around the globe, all of them, in China, I'm just Asia. I just take a look at the Hang Seng and the Shanghai, and then the Nikkei. Then take a look at those as the three major market makers out there, even though there's a gazillion more. And I take a look at what's going on inside Germany, what's going on inside the UK. They're all set up here as bullish patterns. There ain't no bearish pattern out there inside of any of those worldwide markets out here. Inside the U.S., yeah. Inside the U.S., we got problems out here. We got problems in River City. Our problems, though, there are hurdles that can't be overcome. They haven't been overcome for a while. And, in fact, right now, if you take a look at the ES Mini, do I expect the ES Mini to do much more today? No, it did all its work at about 5 o'clock this morning. That wasn't the exact time, but it did about all the work that it could do. It did all the heavy lifting while you were sleeping. Maybe some of you were even snoring. Maybe some of you even had one of those magic pillows or whatever kind of pillow it is that guy sells out there. But the problem with the ES Mini right now is it is right at a significant level of resistance. It hit the 2101 area when it got up to a price of 2102. I would say that's hitting it. That 2101 is our TAS weekly profile high. We know we're in a consolidation inside our markets here in the U.S. Maybe this is going to – and so the upside action inside the ES Mini, just as an example, it's going to be equal to or greater than this consolidation, a measured move. So it's 2010. That's at the bottom of the consolidation, and we're going to call it 2100 up at the top. So you've got, a 90-point move. You would anticipate if our markets respond positively and we see that the ES Mini is trading above the price point of 2110, what you ought to expect is you ought to expect to move up to about 2200. Give or take, 2090, somewhere right around there. That measured move, equal to or greater than that measured move inside of the ES Mini. Likewise, downside, what you would be looking for on a negative response to the market is you'd be looking for the ES Mini to move all the way down to 2033, maybe even, where you got this hammer candle for May 19th. That's where your eyes need to be glued out here. I'm sure when we have Steve Nissen on tomorrow, he would also point out that hammer candle from May 19th. And that price point is 2014, because you know the expression. You close below a hammer candle. If you're long, you're wrong. So the charts are set up. They're set up wonderfully with regard to, now, should you buy up at these highs? Absolutely not. You're at the top of a consolidation. The time to have bought was down at the lows. The time to have bought was down at maybe a bottom of a TAS profile. Could have been the daily, maybe as it was moving down towards the weekly out there. But right now is not the time to get all in. And so I can't expect or anticipate whether it's the ES Mini or whether it is the Dow, because the Dow futures have done the same thing. Exact same pattern. It's got about a 900-point move, either to the upside or, quite frankly, to the downside, or at least 17,349 would be the level of support I'd be looking for inside the Dow. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Yesterday on the show, we were taking a look at the IBB. We were noticing the increased volume. Then I got a couple of emails, ping inside the Tiger's Den to go take a look at the IBB. And thanks for that, because I forgot to go ahead and explode that chart open. So if you're watching us on Tiger TV right now, what you see is a 10-minute chart for the IBB. Now, it's got the pre-market, post-market trades in here as well. But what you can see with regard to volume is it all came at one point in time. It came in one 10-minute stretch. I could take this back even further. Let's just see. I'll put in a 5-minute chart out here. It came in basically one stretch out here. And I put in a minute chart, but let's, enough is enough, right? I guess we're getting the point out here. And that is that the IBB went from a price point. This was taking place at 10:30, somewhere right around between 10:30 and 10:35. Went from a low of 253.72 to a high of 260.50. Nice 7-point move. Now, volume behind that deal during that time period was 766,000 shares. Makes a retracement, right? If we go take a look at the retracement now, this is coming. No, this is a 930 area. So if we take a look at retracement from high to low, makes a retracement up until about 1 o'clock yesterday afternoon. But it was all the pullback here was on light volume, but it was really on normal volume, right? These spikes out here that took place between 10:30 and 10:40 could kind of throw you off. So the question is, where is the IBB going and the volume? So, I don't know. Do you know how to read this volume bar from yesterday? Yeah, because there's been no follow through to the upside inside of the IBB. So, there's been no follow through to the downside per se, but there certainly has been no follow through to the upside. And the reason why I say that is because when you're coming off of a bottom, you would expect that we're not the only ones looking at this. Of course, maybe we're some of the few that just went ahead and exploded it to take a look at, okay, so what's going on here? You would think that coming off and testing a bottom, see the session again that it was testing was this trading day of February 9th. And yesterday, as you can see, biggest volume day out here, as thinking that it was pushing higher. It was. It certainly didn't push lower yesterday. It made it over the previous high out here. But, the question is, what are my thoughts on the IBB? It's a little bit questionable. Now, let's just take a look at our market profiles. What do our market profiles say here? Well, our market profiles, oops, let me get rid of that line that I just threw here. Here's what it says. It says you ought to have good support, regardless of yesterday's transaction. You ought to have good support at about the 250.41. So if you're, I'm not saying exit IBB. I'm just saying I put it up on an intraday chart. We took a look at it, and it's perplexing to me. If it's not perplexing to you, then maybe share that with me. That'd be cool too. But to me, it's a little bit perplexing when I take a look at the activity since that little flurry that was out there. Now, IBB. Should if the markets are in fact set up to move higher, the IBB should move higher. It needs to. And today is a brand new day for it with regard to its market profile. So it did form a brand new market profile today, which is below the prior daily profile. That's never bullish. You like to see bullish profiles form above the prior ones. But remember, our TAS market indicators are a lagging indicator. So we're not necessarily going to use those. They're not going to be used to establish a brand new trend out here. It would help in this case for the IBB, for those that are long, to see it close above 263.47. And that would then say price ought to get up to about the 271.18 area. So that is what's going on in the IBB. I don't have any conviction, even with that high volume day, at this stage of the game for you out there. So hopefully that assists you for those that are inside of the IBB. Now, let's take a look at Priceline out here. Let's look at the daily chart for Priceline, because my recollection is we said that's going out after its highs out here. Oh, looks like it's already done. Looks like today was the day. So let's go see. So it's run right smack dab into that chainsaw. That chainsaw was this nice gap down that formed out here with volume behind that move from November the 9th. That had volume at 2.6 million shares. It ain't anywhere near that today to the upside. You can't anticipate that it would be anywhere near that anytime soon. 450,000 shares basically at this stage. But the number to be watching today is going to be that 1386.98. You're at 1386.71. You've tested it. You've tested on lighter volume. If it closes below that, all that we know right now inside of Priceline is it's just hitting resistance. It's a tough area. There are folks out there on that day of November 9th, I guarantee you, that purchased this equity between 1386 and 1303 and thought it was a steal, thought it was a buy. And then come the trading session, I'm sure, on February 8th, when it got down to 954, they were saying, what in the Sam heck was I thinking out there? And just please, God, stop it from going down. And maybe they didn't say God, but you know what I mean. Please stop it from going down. And if you ever get back up this way, I'm going to jump off that train. That's the supply line that Tom talks about. That's the supply line. That's why gaps are your friend, because it really helps us to identify those levels of resistance out here. Likewise, closing above 1386.98 on light volume would be pretty impressive. And that would then suggest that the gap would get closed. If it gets closed, which means any close above 1430 out there, that would be super impressive. And that is on Priceline. So today, running right into resistance. So if you're looking for a signal from it, you're not necessarily getting, not bearish, but you're not getting any kind of, hey, this is cool, I'm breaking out to the upside. Now, let's take a look at Chipotle out here. CMG is the ticker symbol. When is this thing? Because there's plenty of people out here that are, this is like scorched earth to a lot of folks. Even people who never ate at Chipotle, and if they had, they would have said it is like eating scorched earth there. I never really, I like Mexican food. I do. I just gone every time I've gone, which is a handful of times to Chipotle, I have never walked out there feeling like, God, I can't wait to go back there and have another one of those, things, whatever it is, those bowls or those. I just haven't gotten it. In any event, here we know that they had the problems with the big norovirus scare or what have you, created a huge island top out here. We looked at the island bottom inside the DAX. This one's got the most bearish of patterns out here, and that's the island top out here. It is stranded. So many passengers. It can't. You don't want to call it Gilligan's or Giggling Island out here, but those folks are in a nasty position. Those are the people that bought into Chipotle between July 21st and the trading day of October 20th. And they're in there somewhere between 680 to 750 or so. It's traded at 407 right now. Is price ever going to get back there? I don't know. It certainly doesn't have to. There's there's no pattern out here that says that Chipotle has to get back up here. If we put this on a longer term chart, what's the old monthly chart for Chipotle say out here? What does it say? It says you're down testing a swing point right now from the month of January, which had 38 million shares. You're at 18. At least you're testing a swing point on light volume. Not a reversal candle of any stretch by any imagination out here, but at least it's moving down with lighter volume. But in all reality, this is where Chipotle is headed. It's headed back to this swing point area, or should head back. It's a high volume weekly candle. It's from the week that began October 1st. Oh, it's a month. I take that back. Forget about the week. It's a month of October in 2012. And Chipotle is just making its way downtown to 233 to 322. It's Steve Rhodes with TFNN. Dow's up 147. S&P is up 18 points. We'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 154. S&P is up 18. I guess we're about 12 hours away from knowing what the Brits are going to do, right? Is it 2 o'clock in the morning? Folks, maybe someone in the den knows the timing of it. But I think it's somewhere between midnight and 2. Hey, let's go out to Philadelphia and speak with John. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
Taking the call. Steve, hi.
Hey, Mike.
Thanks for taking
pleasure.
hi.
Yeah.
Thanks for taking the call.
Sure. You want to take a look at Southern Copper out here. So I think you're a copper bull. Am I mistaken about that?
I am long copper and SECO bought this week. Steve, I bring to your attention, I think it was last week, maybe 2 weeks ago, with a double bottom in that stock, kind of close to 25. Looked to be an exact test of a Fibonacci 618 retracement. And wanted to ask you, if this starts to rally, where can you personally see this stock headed, please?
Sure. So you gave two bottoming signals. Of course, there was the third that you left out there, which was from the high on April 29th down to that low out here. And we don't want to offend Mr. Basil Chapman. And down to the low on June 15th, it was that famous seventh inning stretch candle out there. So nice call on the long trade out there. Of course, that makes the trade pretty easy because if that low gets taken out, that suggests to us that there's something else that is up. With regard to where this will likely head to, right now today, it's dealing with the weekly point of control, and that price point is at about 27. Let me see here. Let me get this on my screen out here. Is at 27.87. So clearing this area here is very nice for your long trade, and would suggest that this would move up to 29.59, which really says that it's going to go ahead and test the bottom of the swing point from April 28th, and that's where you get information released to you. 1.9 million shares out there. If it's moving into that with volume, says it'll go test the high, maybe take it out, which would form, a fairly large A to B equals CD. You've got, a number of different patterns that you could play out here. But you're thinking, as I've read just a couple of your posts inside of the Denver Copper, is this more of a longer term, intermediate type term bottom that you think light sweet copper, that copper has put in, or is this more of just a trade for a shorter period of time?
Steve, it's to answer that question, frankly, I'm not sure. What I will tell you is these price levels, both on copper and SCCO, look to me to be candidates for putting in fairly sizable intermediate-term bottoms. Mm-hmm. So I guess the way I'm approaching it is get long and then see where it heads and be willing to stick with it if it just, if it starts to develop legs to the upside, if you will.
Sure. So to the extent that the movement inside of SCCO is going to be influenced by copper, then we have just shifted over to the current copper contract, which I believe is July the current copper contract. Looks like it is volume-wise to me.
That's correct.
Okay, so the July copper contract today has where in SCCO it ran right into its weekly point of control. This is running right into the bottom of its weekly TAS market profile. So you really want to see copper clear 216, 2.1683 to be exact. That would just simply add to the bullish outlook. It doesn't say it'd have to do it today, but that's what you're looking for next, in my opinion.
Excellent.
Alrighty?
Steve, thanks.
Hey,
I appreciate the update.
You bet. Thanks for calling, John. Hey, folks, don't forget our polar bear, Dave White's up next. Tune in tomorrow because I'm going to have Steve Nissen, the one and only, the candlestick maker. He'll be with us for a good half of the show out there. So have a great Thursday. We'll see you on Fabulous Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.